Welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to dig into Zoom stock, which just went on a rocket ship ride all the way past $400 on a huge earnings report. I'm going to talk about what is a fair trading value for Zoom right now and where I think the stock will go from here. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before investing in the stock market. However, if you do like stock market analysis and personal finance topics, then please subscribe to the 40 Finance channel. Thank you to everyone who supported the channel. And as a free bonus, for those of you who are interested, I got my 15-minute stock analysis report for free. Link is in the description. I give some great hacks for quickly analyzing stocks like Zoom so that you can save some time and build a better watch list. Okay, so if you haven't checked in on stock market news in the past day or so, you missed out on Zoom's monster earnings report where they basically crushed it across every level from a revenue standpoint. And Zoom's been a really interesting sort of pandemic stock because guys like me can't figure out, is this a temporary thing with Zoom or is this a long-term company that we should be thinking about? The bears will say that competition will eventually take over. They have too many free customers, so on and so forth. While the bulls would say, man, Zoom has crushed it on user experience, expectation, ease of use. My grandma can use it, teachers can use it. So there's really a case for both sides. But the most important case for this channel is in regards to the stock. How is their revenue doing? Where's their EPS? Let's jump into all that. All right, stock price at the time of this filming was $445.61. It was actually trending down from here slightly. I believe it was right around $430 before I hit the record button. This screenshot is from Yahoo, and I had to make some edits because they're a little bit behind on the screen since Zoom has moved up so quickly. See, I highlighted the PE ratio. Yahoo's showing 2600, but that is because their trailing 12-month EPS, in my opinion, was wrong, at least when you use the valuation metrics in the Zoom earnings report. So if EPS for trailing 12 months is indeed $1.36, like I think it is, then that brings the P down to 327 at a stock price of $445. You see up at the top, we have a trailing 12 months revenue, which includes this past quarter of $1.35 billion. The fiscal year 21 revenue that Zoom is projecting as of today is in the neighborhood of $2.39 billion. They've got almost $1.5 billion in cash and a very small debt load, long-term debt load of $63 million. There's something that you don't see on some of these new kind of IPO stocks very often. And of course, the chart at the bottom, this is a year-to-date chart. You're starting in that sort of $60 range or so and just lightning all the way to the top. You can barely even see where the 445 begins. It's a thin line, but that is exactly where we're trading at today. All right, so the hardest thing to figure out with Zoom right now is earnings going forward. Luckily, they helped us out a little bit by making some of their own projections within the earnings report. That'll give us an opportunity to sort of reverse engineer where the stock price might hit once we get all the way through fiscal year 21. Zoom goes by a standard calendar for their earnings, so fiscal year 21 gets reported in January, but it is actually the results from 2020's calendar year. You see the earnings history at the top. I've highlighted the 2 quarters that pertain to the year 2020, aka fiscal year 21. And on their earnings report on 4/29, they had an EPS of 20 cents. This past earnings report, they came in with an EPS of 92 cents for that quarter. So in the green box, we have a $1.12 combined EPS for Q1 and Q2. Now, looking down to the bottom left, This was their prepared remarks from the Q2 earnings. And you see I highlighted a couple things. For the full year of fiscal year 21, we expect revenue to be in the range of $2.37 to $2.3 billion. I'm using the high side. And then in the next paragraph, we expect to deliver non-GAAP earnings per share of $2.40 to $2.47. So we take that statement, follow the blue line. They're saying 247 on the high end, so I subtracted $1.12, which is what they've already done this year. That gives us an estimate of $1.35 for Q3 and 4 combined. That's based on Zoom's information. Now, considering how much they blew this quarter out of the water and the fact that they generated 92 cents earnings per share, I'm going to go ahead and raise that now and be an optimist for the sake of this video. So my EPS for fiscal year 2021 is $2.96, and I'm basically just saying that they will replicate Q2's 92 cents for the next 2 quarters. And that will put them at $2.96 EPS for fiscal year 2021. All right, so obviously you can make your own estimates, but for purpose of this video, we're rolling with the 297. Now let's figure out what does that mean from a PE standpoint, and let's think about the PE a little bit, and that will allow us to get to a point where we could project a price. So the simple version here at the top, today's price is $4.45. Let's pretend that it doesn't move at all until they report the full year of 2021 sometime in January. So we'll just anticipate $4.45 sticks. Then we have our $2.97 estimated EPS. That brings our projected PE to $1.49. Now, in the yellow box below, we can see where Zoom has traded historically. You know, you're in some crazy territory there of 1.5K, 1.4K. I sort of X'd out the current ones because we know the math is wrong. All the way up to 2.4K in April of 2019. So talk about trading at a high valuation. Zoom certainly was, but here's the thing. Looking off to the notes on the right, but people who paid that type of multiplier were assuming a best case scenario, right? Well, I say the best case scenario has just happened. They've got a pandemic with people inside. They've got, a super increase in need for their service. So I will say the best case has happened. And that brings us to a question of what PE today, knowing that the best case is unfolding under our eyes, what PE is fair. I threw a couple comparisons down there. Salesforce, ticker symbol CRM, is trading at 105 PE, and Adobe is trading at 68. All right, so do you think Zoom is comparable to Salesforce and Adobe, both of which are software as a service type companies? That's up for you to decide. If the PE at the end of the fiscal year is 149, they hit the EPS that I'm projecting of 297, then the price today is about fair for where I would expect it to be in January. So I wouldn't say it's fair today, but if I project it ahead to when they will announce their fiscal year report in January of 2021, then I would say that price is fair in that standpoint. Concept here is if you did take Adobe and Salesforce and you assume that they are comparable, I would figure Zoom has further runway or easier growth than those two companies, only because they're younger and we haven't really dipped into a lot of international or enterprise growth for Zoom yet. Now let's take a look at what some of the top performing analysts think about Zoom stock after yesterday's report. So for this, I'll use the TipRanks dashboard that I am a subscriber of. If you look off to the right, you can see that the date of all of these came in today. So these are fresh analyst perspectives, and it's very interesting. No one can seem to really land in the same place. In fact, if you go down, I believe we have 6 buys, 7 holds, and the most recent analyst came in with a sell at 315, but you have a ton of 450s, 440s, and then the next tier would be in the 370s. So a real mixed bag from analysts, and it just goes to show you just how wacky this scenario is with Zoom. You know, my projections that I put together on an EPS of 296, that's kind of an optimistic play, even though they just hit it. But we still have to figure out, are Q3 and Q4 going to be good quarters for Zoom? I would anticipate yes, because school is in session, and of course we're staring at the likelihood of school closures with pandemic scares coming up. And then you have colleges who aren't hosting their classes and they're pushing them online. I would figure that Q3 and Q4 should be as good as Q2. But that's certainly a guess on my part. All right, so what's the bottom line on Zoom stock going forward? Well, like we just mentioned, analysts are a mixed bag, so you can't really look for a lot of support there. You're going to have to form your own thesis on where it goes. My sort of optimistic EPS of 296 takes today's stock price of 445 and it caps it at a PE of 149. That is not incredibly unfair when you compare it to some of the sectors, and you understand that, of course, PEs are very hot right now with interest rates running close to zero. The question for you as an investor is, what multiple would you pay if they landed at 296? Do you see 2021's year as having even more growth for Zoom? Do they double their growth from here? And that would assume they would double their EPS. This is where you have to make your own projection on the difference between Zoom being just a pandemic play versus a long-term play, assuming the health situation gets a lot better. I think one thing that is really key if you're forming a thesis is digging into that earnings report, figuring out how much is left in the United States market as far as enterprise companies and big companies actually paying, getting off the free plan and paying for Zoom service. That's going to be a key. And on the international side, I see a ton of opportunity. It's just a matter of trying to understand what these international countries are currently using, which platforms are popular today, and does Zoom have an in to penetrate different markets in a reasonable manner? And the big question for everybody, will competition eventually cut off Zoom's user acquisition, aka Google, who's changed a couple buttons around on how they book meetings and stuff in Gmail? Does that crush Zoom in the short and long term? And then do other competitors like Google eventually start to hurt the profit margin for Zoom? These are all questions. It's not like online video is some patented formula that nobody can figure out. There's a lot of opportunity for competition, but you got to hand it for Zoom. They've got a nice head start. Last point, at least for me, I'm not interested in owning Zoom at this PE multiple. However, I am glad that I have exposure to it through both the QQQ ETF and the FDN ETF that I hold in my retirement accounts. If Zoom goes crazy, I'm covered. They're pretty small allocations in both of those ETFs. But if we wake up in 5 years and Zoom is as big as Salesforce or Adobe, then they will be represented well in my ETF exposure. All right, guys, so that's a quick take on Zoom's latest earnings report. Let me know where you think this stock is headed in the future. Please give me a like and subscribe if you enjoyed this video. We'll see you on the next one.